Good afternoon, everybody. This is Dennis Wilborn. It is Saturday afternoon rather than a Friday afternoon. Dennis Wilborn from All Active Trend Trading, and David Grandy is with us from All About Trends. Hey, Dave.
How's it going, Dennis?
It's good. I'm down in San Diego, man, for a wedding.
Excellent.
I have a niece getting married, and kind of an interesting week in the market, a little bit of strength, a little bit of weakness, and I know you're going to have a lot to talk about, and I'm going to have a lot to chat about. A couple of really great things coming up. You're going to be presenting at, I think you said 9 o'clock at the Money Show this coming Friday, right?
Yeah, Friday the 22nd at the Money Show in San Francisco, 9 o'clock. I'll be doing a quick presentation about what we do, chart patterns, how to trade them. So we'll be covering long side patterns, short sell patterns, and change in trend patterns, and just going through each of those patterns and explaining them and giving current examples of each one as much as we can. So I'm looking forward to it. It'll be fun.
Okay. Well, I'm going to be there to support you. I'm going to come into the city a little bit early that day, and you know where it's going to be?
They changed the location, and I don't remember the name of the hotel now.
Okay.
It used to be the Marriott, but now it's somewhere else.
Okay. Well, we'll look that up, and you can just Google it or look it up on the internet, and it'll tell you where the Money Show is.
Yeah, moneyshow.com is the web address.
Okay. Well, I want to welcome everybody to the How to Make Money Trading Stocks, the Market Stock Talk show that we do. We'll get going into our analysis of what's going on with the market. As I said, I'm broadcasting from my hotel room in San Diego. And I want to remind everybody that all the materials that we present are for training purposes only, and that we suggest and strongly recommend that a person paper trades any new method prior to the risk of their own personal capital. Let's get going into the last week, as we said, and that's what's focused on down here at the bottom of the screen. Last week, we were going, we had fallen to support, and we were questioning, is this are we going into a suckers rally? And this week what we're seeing is now the stocks are right back up to the indexes are right back up to a level of resistance. And so I know your partner, Harlan, had mentioned something about just getting into a trading range and staying there through the summer months, and we may be doing that. But we've got S&P at resistance, we have the Nasdaq 100, and for those who have watched the show before, I've switched from the Nasdaq Composite to the Nasdaq 100 because we're going to be trading more of the TQQQ, or the Qs, and so it's related to the Nasdaq 100, so we want to be paying attention to that chart. And then we've got the Russell at resistance. Outside influences, earnings are just about over, so we won't have much influence from those. But I found Friday's action a little bit interesting. It seems like there is a hair trigger to the sell side. However, we did have a very nice recovery after the news in the Ukraine and Russians having some conflict. On Friday, after that news settled out a little bit, the market did come back. However, it did not break through resistance. One of the charts that I like to use continuously is this chart of the percentage of stock above the 20-day moving average on the NYSE. And as we can see, we had a bottom here around the first part of August, one back in April, and these almost all coincided specifically with the bottoms we saw in the market that led to a bounce. The question we've been asking over the last few weeks, when we're going to get into a range here and just bounce around, we did break above the 50%, but then finished back down about 52% of the stocks that are above on the NYSE above the 20-day moving average. So as I was sharing with David earlier, it seems like the indices are like about 3 weeks out of sync with where they were last year. We got a big up move towards the end of August last year, which it seems like we're in a little bit of an up move now, but then we sold off to the beginning of end of August, first part of September, and then got another bounce. And then this one later in October led to a pretty good rally through the end of the year. But why is this important? It seems like there's a attraction of stocks to move back to their particular moving averages, and the 20-day is one of those that when stocks get real far extended from that, they tend to like 10% or more extended from that, they have a tendency to want to re-seek the 20-day. Same way if they get over 10% extended above the 20, we're typically getting close to time for a pullback. Now, some of the new research we're doing, David, I think the folks will find it interesting once we get that out and presented. Let's go over to the charts of the market. There we go. It's a little bit different, David, when I'm sitting there in the hotel room. I don't have all the cool tools, to be able to, like I normally do. There we go. Look at the S&P. What we see on the S&P, we got a nice little up move that started about 7 days ago when it bounced off the 100-day moving average. And yesterday, what we finished with is what we would call a hanging man. And as you can see, it found support at the 8, moved back above the 20. However, it closed slightly below the 50. Hanging man is typically a bearish reversal type candle. So we will find out this week whether we are getting just the old proverbial moving average squeeze, where the short term squeezes up against the longer term, but then we get a reversal back to the downside, or if we're going to push further up into this, back up to the resistance area up here at the 1980 level. We see this even more on the Nasdaq. Nasdaq has just put in, and may be putting in, a really great looking range, because look where it's at. This is a beautiful hanging man right at a resistance level. And so this is looking very much like a double top type of move. And but if we do push above this, Nasdaq could go on higher. Although this time of year, I mean, it can happen, but this time of year, David, you just kind of like never know. And it may need to regroup, because there's not a lot of, even, when IBD said that the market is in confirmed uptrend, did you read some of the commentary on that?
No, I don't. I try to just look at the charts.
Yeah, I read some of the commentary, and it was what I found very interesting. It seems like they were almost apologetic for putting the market back in confirmed uptrend. And so whenever, that's one of those read between the lines kind of thing. Like, well, yeah, we have to put it back in confirmed uptrend. However, be really, really careful. And they recommended people you only going in with half positions and that type of thing. So I found that a little bit interesting. And take a look over here at the Russell. Russell, the weakest of the three indices that we're following. And I want to point out a couple of things on this chart. First, you see this purple line that goes across here? That purple line I drew in last week, and I drew it at basically on the weekly chart. As we see the weekly chart, that was a really strong level of resistance. And sure enough, we made it all the way up there. We actually hit that on, that appears to be Monday. It pulled back to the 8 and then bounced higher. And so while the shorter term moving averages appear to be moving up. We've got a strong level of resistance up here at the 50-day moving average, but also this one that was coinciding with the 100 and the 200-day. And the 100-day is just about to cross below the 200-day. So, you know, could we see a bounce up here at the 50 and then a pullback all the way back down to here to the strong support level? We will see. And the other thing I want to point out to folks on the chart is that we have kind of a divergence in the two indices, or not the two indices, but between the timing of the charts. We've got, and this is the same way it is in a lot of individual stocks. We'll have the daily indices looking like they want to move from, you know, they're either all the way up here at the oversold or down here at the oversold, overbought, undersold. But the weekly charts are looking, a lot of stocks are looking, they're way up here in the overbought condition. And so you kind of have it out of sync. When you can get both the daily and the weekly charts in sync, typically that leads to more significant moves in the direction that the market's moving. And it's just something we recognize over the time. So, David, for next week, Russell's weak. It's got a good flag line. If it breaks back down, it could retest back in here, or it could retest up at the 50. But I'm going to be watching it. The Nasdaq, I think it's going to be a very news-driven market through this week and going maybe all the way up until Labor Day. So that's it for here. I've got a couple of stocks to hit later, but David, let me switch over to you.
Okay, that sounds great. Yeah, you know, it's a little tricky here. It's not as clear-cut as we'd like it to be. So, you know, for us, we're mostly cash and just letting the charts tell us what to do. And we've got some pattern setting up for sure. So it's just about whether or not they trigger. So, you know, about a month ago or a few weeks ago when the market started this latest sell-off or correction, whatever you want to call it, we got a lot of emails and phone calls, hey, are we going to start shorting? And we talked about on this webinar the past couple of weeks that just because the market goes down doesn't mean we're going to start chasing it to the downside. What we need to see happen is a rally back up to resistance levels, and should that occur, we should start seeing some short sell setups, and that's exactly what we're seeing now. So this is a more appropriate time to short when you've had that initial down break and then a pullback to areas that used to be support that are now acting as resistance, and so now you have two confirmations of a potential new trend in the market. I'm not saying that that's going to happen and that it's time to go hog wild and start shorting things, because you know, we've had false alarms like this in the past. I'm just saying that for the first time in a while, we're actually seeing short sell setups, and that's all I'm going to talk about in today's webinar, because that's all that's out there. There's more short sell setups than there are long side setups, and you know, the opposite was true a couple weeks ago when the market was going down. There weren't any short sell setups. Now but there was long side setups, so that told me that, hey, we're probably going to bounce here. And that's exactly what we did. So we'll see if we roll back over to the downside or not. The charts are suggesting that, but that, you know, it may not be the case. It's just all about whether or not the patterns trigger or not. So it's just something to be aware of. As a result, we're mostly cash. You know, we don't chase stocks either to the upside or the downside. We let them come to us two ways. On the long side, we let them pull back to areas of support and we buy them at support, and on the short side, we let them rally back up to resistance and we short them at resistance, and then we cover at support and we sell stocks when they hit resistance. So we're just, you know, trading what we see, not what we think, hear, or fear. We're not trying to go out there and be heroes and make these bold predictions. We just simply let the charts bring us in and take us out, either on the long side or the short side. And by doing that, so far, we're only a couple weeks into August, we've already locked down over $3,000 in gains just from the trades we featured in our newsletter. So it's been a really nice month so far, and we got a couple weeks still to go. So for us, is the market going higher or going lower? I don't know, and I'll never know. All I know is I can take a clue from the charts of leading stocks, and it's leaning more toward the short side now than the long side. And we just trade what we see. That's it. It's that simple. So here's an example of that. So this is qiqi. We've been talking about this in the webinar for the past few weeks. We have this uptrend channel. We had a pullback off highs inside the channel where it pulled back to support at the trend channel and the 50-day moving average, and then it triggered by breaking above the pink line. And given that the indexes are now all at resistance levels, we opted to take half of our position off the table on Friday, and now we have, you know, two different things we can do here. If it keeps rallying, well, you know, we still have a position, and if it pulls back as the indexes meet resistance and pulls back to support and finds support here, we can look at buying back our shares. So it gives us a lot of flexibility, and by having that half gain locked down, it really mitigates our risk. So that's the type of trade we like to do. So in the market, three things you need to know: uptrends and how to trade them, downtrends and how to trade them, change in trend patterns and how to trade them. And for a long time, the last few months, it's all been about uptrends. And today's webinar is going to be just about downtrends, because that's the patterns I'm seeing right now. So as you can see, you know, Dennis did a thorough job of covering the indexes. Just a quick review here. We've got the Nasdaq hitting a resistance level, short-term overbought, and this is the second time now has tried to break through a prior high. So we'll see if it does or not, but for now it's meeting resistance. So in stocks that are in downtrends, it's all about what we call the pullback off lows patterns. This is the exact opposite of our pullback off highs pattern, where we're looking to buy stocks on the long side. This is where a stock is in a downtrend, and then it breaks support, and then it pulls back upward higher towards an area of resistance, and then it breaks down. So here's a good example of that. This is Jazz Pharmaceuticals. You can see it broke support here. It formed this bearish channel and rallied back up to resistance. There was multiple levels of resistance here. In this case, it never got back above the 50-day moving average, and then it broke down. And so we initiated our short sell on the break of this pink line and covered here at support, lateral support. We did this trade I don't know, a few months ago. So that's exactly what we're looking for. So now I'm going to go through some current setups that have done this. They've broken through support levels, and now they've rallied back, and they're sitting at resistance. They haven't done this yet, and that's what we're looking for, and that's what we're going to take advantage if they do that. So here is alumina. As you can see, it's broken through support, it's rallying back, and it's at resistance at the 50-day moving average. The stochastics are short-term overbought. So what needs to happen for us to take a short sell is a break through this pink line, and that's where we'll initiate our trade. Caterpillar on the Dow looks a mirror image of the chart of the Dow. We've got a break of support and a rally back up to resistance at the 50-day moving average. And then all we need to do to take a trade is a break below the pink line. The red lines here are your stop loss levels, because they're areas where it's meeting resistance. So if it closes above that, that can be your stop loss. Just like on the long side, let me go back to QIHU. We have these blue lines, these blue support lines, as a break through that as our stop loss. It's the same thing with shorting, just the opposite. So if it breaks above the pink line, breaks above resistance, that's our stop. Okay, so here's NXPI, same thing. Not a whole lot of scale here, but the pattern is there. A breakthrough support and a rally back up to resistance, short-term overbought, and it's just a matter of breaking that pink line to the downside. So that's it. That's a pretty simple pattern that we look for. But we don't want to just go short stocks here on the initial break, because we don't know if this stock's going to continue higher, and it's just simply building a cup pattern and building a new base. You know, what gives us that confirmation that it's time to go short is when it breaks this pink line to the downside. So we've got, you know, a break of support, a rally back, and it failed at resistance and then broke down to the downside. That tells us that this stock is now in a downtrend versus being in an uptrend and just trying to build out a new base within that uptrend. So that's why we don't react as soon as the market starts selling off. We need to be patient and wait for this confirmation rally back up to give us a green line on the short side. So what do we do now? We're mostly in cash. We only have 2.5 positions right now, and we're more apt to lock in the gains from those positions, you know, than we are to let them run at this point, given where the indexes are. So let's just take it easy. Let's see how the indexes handle the resistance here. The Nasdaq's looking the best. You know, it's the one that's starting to break into a new high. The S&P and the Russell and the Dow are all below the 50-day moving average, and so they're not as strong as the Nasdaq. So we'll see. Let's just see how the indexes handle things and look at it from the perspective of being mostly in cash. And then we trade what we see. If we see these new short sell setups that we're going to be featuring in our newsletter tomorrow start triggering trades, then we're going to take those trades because we trade what we see. And then just a reminder, I'll be at the Money Show on this Friday, 9 o'clock, and moneyshow.com is where you can go. It's free to attend, so just go to Money Show and sign up. There's absolutely no charge, and there's going to be hundreds of speakers there that you can take advantage of. So, and it's a really great show. They really do a good job, so I encourage you to come out and check us out. And just a reminder, we will be resuming our live webinars on Friday, September 5th. So I hope you're storing up your questions and your stocks, and because we want to have that be interactive and have you bring those to us, and we can talk about it and have a good time together. So and the final reminder, we have a 15-day free trial. If you want to learn more about these patterns that I'm going through and you want to see them in action day to day, we have a daily newsletter that goes through what's happening technically with the indexes, technically with stocks. When these trades trigger, we send out trade trigger alerts, so you can literally trade in tandem with us or paper trade with us and see what more about what we're all about. And it's completely free. There's no credit card or anything needed. Just go to our website and sign up, and it's a great way to get a better feel for what we're doing here. And that's about it, Dennis.
Dave, thanks a lot. And can you still hear me?
I can hear you just fine.
Okay, great. Yeah, I had to pick up a new headset. You know, you said a couple of things, Dave, that just really I really love is that, you know, with both of our systems, we don't react. We see what's going on, and then we move. And I know that there's been several times over the last week or so with all the, you know, the markets gapping up, gapping down. One could react to that and try to make a trade work. But that is always, you know, kind of a fool's errand. And if you're not getting, you know, the setups, you wait. You wait for the setups.
Exactly.
Exactly. And I loved also what you said about, you know, especially on some of the short setups with both the All About Trends, and for everybody out there, David is from All About Trends. I know that we have David and Dennis is from the Active Trend Trading. And there has been some confusion out there, but hopefully that'll get straightened out. I know that if you email either one of us, and if it's actually for the other person, we do forward them back and forth to each other. And but a couple of real quick, just, you know, you're talking about short setups. A couple of the trades we were looking at this week, you know, Skyworks. Skyworks did a great break out of this little flag pattern down here. And we jumped in it. We took part of our profit, that aspect of taking profit at a defined resistance level and our support level in the case of a short. Very critical, because it makes it so much easier than to just sit with the rest of the trade because you're profitable. And that's one thing we practice all the time. But a couple of, I just want to throw up 3 quick stocks. YY, which has been on a tear. But look at YY over here on the weekly chart. And look what you're getting here. We're getting basically a potential double top. If the market does turn over, now I wouldn't typically take a short trade up here. Excuse me, but looking here on the weekly chart, we could in fact get a drop off. And one of the questions that we try to ask, that we ask before we jump into a trade, is the trade worth it? Is there enough juice if it falls to its expected level or moves to expected level to make a trade profitable? And so YY is one of the ones we're looking at. It has been very strong. Another one we're looking at is our old buddy Tesla. Tesla's done a great job, but look over here on the weekly chart. Where's Tesla at? Right up against support. Now, can we bust up and move through support? You betcha. But if you've been noticing, we've been getting a lot of breakout failures here lately. And one of the things I wanted to comment on, David, is if you are trading the Nasdaq 100, it too is right up against a resistance level. And you can draw your resistance line in here, and if it pops above it and then fails below it, that sometimes can be a really great trigger for a short-term short or weakness trade. And I'll cover one last thing, David, is WUBA. WUBA, we did jump into WUBA, bouncing here off the 50. We're anticipating a 5 to 10% move from here, which would put it up about 55 with a pre-earnings run. Earnings is before market open on the 21st, which I think the 21st is Thursday, right, Dave?
Yes.
Yeah, so we'll be out of this trade by Wednesday close of the market. Now let's run back over. There we go. Dave talked about all about trends, active trend trading. We do some similar stuff, but also we do some different stuff. We have different triggers that get us in. But again, we are fit. We do set ourselves up to trade in any market condition. To date, we're since June, should be through the close of business this past Friday. We're up $8,200. This is profits taken. We've got about $4,000 in profits that are sitting on the table thanks to the Tesla table that trade and a couple of the Skyworks. Now these are still open positions. And then here's what our services provide to our members, and some of the things we're bringing online prior to the end of the year. System refinements for traders with longer horizons. We're working on that. We'll hope to get that out by the end of, within the end of the month. And then power ETF alerts and strategies, training courses for beginners, and a few other things. And I'm looking forward, Dave, when we do launch back with our live time, and some of the offerings we'll be providing to the folks then. But
absolutely.
And I know, Dave, that we're both very thankful for our members and the questions they ask and the emails they send, and we just encourage everybody to hang in there. With the market, the market's been it has presented interesting challenges over the last 4 weeks, but we are moving into the time of year where the markets tend to turn around and start moving up into the end of the year. So that's what we're looking at. But for this week, I just want to say, Dave, thanks a lot. I'll be seeing you on Friday.
That's great. I'm looking forward to it.
And then for everybody else, trade wisely and trade profitably. Have a great rest of the weekend, and we'll chat with you next week. And with